Hey, rock stars, if you want 2026 to be the year your business development finally feels clear and under control, the Architects class of my Business Development Mastery Accelerator was built for you. We kick it off January 20th, 2026, and in 6 weeks together, we will build a simple business development playbook you can actually run week over week. We'll lock in your positioning and ideal clients. We'll build a focused target list and turn it into a repeatable CRM and LinkedIn routine so you always know what to do next. And you also get 6 months inside my private leadership community, the Catalyst Club, with over 20 recorded events, 4 new live events every month, and access to Catalyst GPT, the only GPT trained on the Business Development Podcast. Registration is now open at www.kellykennedy.official.com. The investment is $1,197, and we have 15 seats total. Grab your seat today, and I can't wait to see you inside the Architects class.
I was based in London at the time, and we were going down to, there was a fully integrated, vertically integrated commodity broker trader out of Switzerland. And we went down, we called them did the whole business development spiel for a long time. And finally were able to get a meeting with them. And so, we went to this little canton in Switzerland and set up for the meeting. We go in there, we start, with introductions and all that sort of stuff. We start telling them about the story of our bank and how strong we are financially and that sort of thing. And they're like, no, wait, we know all that. If we didn't realize that you were a good bank, we wouldn't have this meeting with you here today. And then they took over the meeting and basically said, okay, so here's what it is. We need this amount of credit for trade finance. We're prepared to pay this margin on it. This is the anticipated usage that we would get on this. And based on your published profitability models and return on investment that you want, we know you can generate this much money from us on this particular deal. Here's our written proposal, contains all this information. You take that back, bring it to your credit people and let us know. So it was like, wow. Like 15-minute meeting. We had everything prepared. The client prepared everything, didn't leave anything to chance, said, here you go, take this, and off you go.
The great Mark Cuban once said, business happens over years and years. Value is measured in the total upside of a business relationship, not by how much you squeezed out in any one deal. And we couldn't agree more. This is the Business Development Podcast, based in Edmonton, Alberta, Canada, and broadcasting to the world. You'll get expert business development advice, tips and experiences, and you'll hear interviews with business owners, CEOs, and business development reps. You'll get actionable advice on how to grow business. Brought to you by Capital Business Development, capitalbd.ca. Let's do it. Welcome to the Business Development Podcast. And now your expert host, Kelly Kennedy.
Hello, welcome to episode 308 of the Business Development Podcast. And today it is my absolute pleasure to bring you John Pelley. John's journey from the rugged landscapes of Newfoundland and Labrador to the financial powerhouses of Europe is a story of dedication, expertise, and unwavering integrity. With a career spanning 35 years in banking, John mastered the art of small business lending before moving to the sophisticated world of cash and treasury management for multinational corporations. His ability to build genuine relationships, coupled with his sharp financial acumen, made him a trusted advisor to businesses across North America and Europe. Recognized as a top performer, John's career was defined by his commitment to doing what was right for his clients, forging partnerships that delivered tangible financial benefits. After retiring in 2018, John quickly realized his expertise was still in high demand. He co-founded Colibri Financial Services with his son, bringing Fortune 500 level financial strategies to businesses across Canada and the US. His consulting firm has since become synonymous with efficiency, innovation, and game-changing savings for his clients. John's legacy is not just in the numbers he's helped clients save. It's in the trust he's built and the industries he's helped transform. John, it's an honor to have you on the show today.
Thank you, Kelly. That's very, very happy to be here for sure.
Yeah, me too. Me too. And we owe a little bit of this to Zale Moransky, so I'm going to give him a bit of a shout out. It was kind of funny. I've interviewed Zale on the show. I know him pretty well. Not like super close, but I met him through the show, and we've had conversations since. But he's an incredible individual. And it was not that long ago, but you had commented on, I think, his show, potentially. And he had messaged me independently and said, Kelly, you really need to meet John. You should make an effort to meet John Pelley.
Yeah, I'm like you. I haven't known Zale that long, but he's been a phenomenal source of connection and even inspiration from his no holds barred LinkedIn post for sure.
Oh boy, yeah, I really like Zale. I really enjoy talking to him. So huge shout out, Zale Moransky, MCO Private Wealth. Definitely check him out. I think you'll like him. John, it's an absolute pleasure to have you on the show today. When we made the introduction, I knew just about instantaneously we had to have a conversation because we really got onto the topic of banking. And I know that as a business owner, when I opened a bank account, I just went to my personal bank and was like, hey, I'm starting a business. I need a business account. And they gave me one. And I don't know what I got, if it was the right choice, if I made the right decisions. I'm a business owner. I am not necessarily the most financially literate person on planet Earth. I just know I need a bank account to operate my business. And you started talking to me and you're like, Kelly, there's more to it than this. There really is. You can negotiate with your bank. You can get better deals. And I was like, John, where were you when I started this thing years and years ago? So I'm hoping today, like I said, the whole goal of everything we do here is always to educate and inspire some entrepreneurs around the world. I'm really hoping today, maybe we can give them a crash course on financial literacy, something that we just weren't taught, frankly, and hopefully set them up for more financial success. And then not just set them up for success, but with that extra money, maybe help them better invest that in themselves and their businesses. So excited to have you on today. But before we get started, John, take us through, who is John Pelley? How did you end up on this path? Lead us through it.
Thanks, Kelly. Well, yeah, based on the introduction that you provided, it'd be like, oh, I'd like to meet this guy. I wonder who he is. It's been a great run. I gotta say, the journey from small town Newfoundland and Labrador, as you said, to Europe and the larger financial centers. It's been just the number of great people I've met along the way has been amazing, for sure. Both in the banking industry and the clients that I met and people that you interact with outside of work and that sort of thing. It's been, just fantastic. When I started with a bank right out of university and did some training with them, my first official post outside of training was in a small fishing community in Newfoundland with 800 people.
Wow.
And then rode that train through a lot of different positions within the bank, continuously learning and training and moving forward. So I went from a town of 800 people to a city of 8 million people by the end of it. And so it's really about taking what you've learned and try and impart that knowledge on other people, other entrepreneurs. And as you said, our primary goal in this business is saving clients money.
I absolutely love that. And I want to spend a little bit of time on your 35 years in banking, because I would love it if you could just shine a big, bright spotlight on it for us. Because like I said, as a business owner, I started a business because I was good at business development. I didn't start a business because I am financially literate and know how to do everything with money and get the best deals and save and plan. That was not my skill set. And so I have had to frankly, just stumble my way through it. I'm just going to say the truth, man. 90% of business owners, I am stumbling my way through financial management for my business, for my personal life, and trying to get ahead. And it feels rather challenging. And I I would love to just maybe get some insight into a bank. You've spent 35 years with Scotiabank. You know the ins and outs. Talk to me. What is the banking industry like?
Let me start with this. It is not a charity. It is not a place for you to donate your money and expect something. I had a client last year said, okay, well, why would we, we know we need to borrow money from a bank. Why would a bank lend me money? And I laid it out to them to say, because there's a reasonable expectation that they can make money from your business. And that's the thing. There's risk involved in lending money, so they want to mitigate and minimize that as much as possible. When people think of banking, most of them think of the lending side of it.
Yeah.
And you know that, bits and pieces of that. But really, the more broader picture is the day-to-day banking that you need. As you said, you went to your bank and said, I need a business account. There's 6 major banks in Canada now and hundreds of credit unions and everything else. Yep. Just among the 6 largest banks in Canada, there are 38 different business accounts as of today's recording that you choose from.
Wow.
And so which account is best for me? You hope and you expect that your banker or the person that you speak to at the bank is going to guide you in the right direction of that. But there's no guarantee. Bankers have a commitment to their bank, not necessarily to their customers.
Mm-hmm.
And so it's very challenging for people to get this and understand it because it is complicated in a lot of cases, and banks don't make it easy for people. It's like, oh, here, read this 38-page agreement and come back and tell us what account that you want, right? So it's challenging. And as you pointed out earlier, based on 35 years of experience, I know the tips and tricks. I've taken what I've learned from the small businesses and the mid-sized businesses and the large corporates, and I've turned that around, and now I sit on the other side of the table and advocate for the client as opposed to the bank. So there's lots to do, and from a negotiating perspective, it's very challenging for anybody to negotiate what you don't understand. And so the first thing is to try and understand it or find somebody who does, and then solicit their assistance. But the reality is a lot of frontline bankers don't even understand what it is that you need because it's hard to articulate that. And so really it's about finding the right fit. And that's a bit cliche for the most part, but the reality is if you do your homework and you understand the competitiveness of banking, you can find some much better deals than what you'll get off the shelf. And just for us as a small business, when we started this 5-6 years ago, both my partner, who's my son, and ourselves were, we worked with a bank for both of us worked at a bank for a long period of time. And we made the commitment that, well, we weren't just going to default to go to that bank and say, yeah, we need an account and here's the services we need.
Mm-hmm.
We went to each of the banks in our community, met with the lenders and the small business folks, and shopped it around. And so at the end of the day, we ultimately ended up at the bank that we were at because they had the best services for us. They had by far the best pricing based on our needs. And ultimately, we saved, just in a very small business, we saved about $1,000 a year in bank fees by choosing that bank and by doing that homework up front. Now, if the larger your business, technically the larger you should have the potential to save, right? But it's an important exercise to go through, and even once you do it and set things up, it's really something that you should be reviewing at least every 3 years, right?
Wow. And you spent a lot of time as a treasury manager, so you would understand that. Like, I would have no idea that I could shop my bank. Like, I'll be honest, I don't even know what account I got.
Yeah.
As horrible as that sounds right now, John, I just went into, CIBC, which was my bank at the time. And I just said, hey, I've been banking with you guys since I went to college, started a business, would like to open a business account. And I did. But dude, like, I feel like I was in and out of that place in an hour and a half, maybe. And I don't understand, frankly, half the stuff that I ended up getting at that time, or if it was the right choice for me or not. I just knew I needed to open an everyday checkings account. I needed a savings account for tax stuff, and some visas. Like, but I feel like that's 90% of business owners. Like, we don't know what we need. We hope that the bank will tell us what we need.
Yes. Yeah. So my question to you at this point would be, what's that brand loyalty costing you? Right? Because ultimately, the bank's services, right? They're all, I call them a commodity. They're all pretty generic. They move money from point A to point B. They let you put money in your account. They let you take money out of your account. They may lend you money. They may not. They might provide a Visa card, whatever. But the fact is that every financial institution can do that. So it's really not much different than a gas station. It's like, well, I buy my gas here.
Yeah.
But it's the same gas that's in the other station down the road and one across the street and everything else. And their prices are pretty well fixed, so it's not so bad. But in the banking world, there's no regulator saying, here's what the price is going to be this week, and it's going to go up 2 cents next week and down 2 cents. They decide their own pricing, and it's based on what they think the market will bear or what their costs are. So when you factor that into it, it's like they're going to make money on me regardless because I'm paying for everything. And as a business owner, it's different than from a personal banking perspective, because from a business side of things, every dollar that you generate in revenue flows through your bank account at some point.
Mm-hmm.
Every dollar you pay out in expenses flows out of your bank account at some point. Those ins and outs, every dollar that moves attracts a fee, right? Whether it's a transaction fee based on a fixed amount or a percentage of the dollars that move, such as when you take, credit cards as a payment form, every one of those attracts a fee. And so the more revenue you drive, unfortunately, the more you're going to pay in fees. The more expenses you have, the more you're going to pay in fees. So you need to optimize how to minimize those fees ultimately, right? And then on the loan side, it's a matter of what interest rate should I get on an operating credit? What's the market going to bear for that? What is it based only on my financial position, or is it based on other risk factors? There's so many issues that come into it. Hopefully, your viewers are not, their eyes are not glazing over, and just as they would when they sit with the banker, because it's just so many factors. And if you look at a profitability model that banks use when they take on a new account from a loan perspective, for instance, there's so many factors that go into that. I liken it to a tapestry, is that you pull a string on a tapestry somewhere, it's going to impact part of the picture, probably down the other side, right? But the profitability models are so complex, and there's so many things that feed into it, that the slightest change in your business, whether it's a reduction in the balances that you carry there, or an increase in the number of deposits that you make, or that you're using a different credit card, for instance, for expense management, all those things factor into this profitability model. And it's on the lending side, it's more than just, are they a good risk? It's, are they a good risk, and can we make X number of dollars on this loan? Right.
Mm-hmm.
And that's really what we help people with, is to try and understand that from their own individual business perspective.
I love that. These are all things that I just had never considered. And I kind of feel like when I opened my business, I had no idea if we were going to be successful or not. Obviously, I hoped we would, but I never thought to negotiate my loan rate or to try to shop for the absolute best possible rate at the time. I was just thinking like, okay, well, I know I need to be able to deposit my money somewhere, right? Walk me through it. You had mentioned that there's certain rates that we maybe should look at. If I am shopping a bank and now I've decided, okay, this is actually a good idea, I should definitely be doing this. First off, what should I be shopping? Like, what are the things that I should be looking at and looking for? And then what is the process of even changing a bank like?
Yeah, good question. Let me walk it back many years and give you an example of how I came up with the process that we engage with for our clients. I was based in London at the time, and we were going down to, there was a fully integrated, vertically integrated commodity broker trader out of Switzerland. And we went down, we called them for, did the whole business development spiel for a long time. And finally, we're able to get a meeting with them. And so, we went to this little canton in Switzerland and set up for the meeting. We go in there, we start, with introductions and all that sort of stuff. We start telling them about the story of our bank and how strong we are financially and that sort of thing. And they're like, no, wait, we know all that. If we didn't realize that you were a good bank, we wouldn't have this meeting with you here today. And then they took over the meeting and basically said, okay, so here's what it is. We need this amount of credit for trade finance. We're prepared to pay this margin on it. This is the anticipated usage that we would get on this. And based on your published profitability models and return on investment that you want, we know you can generate this much money from us on this particular deal. Here's our written proposal, contains all this information. You take that back, bring it to your credit people and let us know. So it was
Wow.
15-minute meeting. We had everything prepared. The client prepared everything, didn't leave anything to chance, said, here you go, take this, and off you go.
Quick pause here, and thank you for tuning in and supporting the show. I want to recognize Hyperfab, a Canadian precision fabrication company built by the team behind Hypervac Technologies, supporting projects in both Canada and the United States. They focus on high-quality sheet metal, fast turnaround, and solving complex fabrication challenges when it matters most. Hyperfab is proud to be our title sponsor for 2026. Thanks for listening. Let's get back to the show.
So I've taken that concept and brought it to Canada and said, okay, Mr. Small Business, medium-sized business, stop donating your money to the bank. The bank doesn't need your money. They're making $101,000 a minute in net profit. They don't need you to be paying them an extra 25 or 30% every year. And so what we do is we gather the information from our clients. We package it all up into a proposal. Sometimes based on what we know that the banks will allow or pay or not pay, we'll shop that through our network of bankers. We'll take all the information back, we'll analyze it, and come back to the client with the best possible deals. And so we do the work, we do the heavy lifting for them, but it's that exercise. You have to go through that, and it can be time consuming or feel like it can be time consuming, but the rewards are incredibly profitable for you.
It's amazing because we just don't know. We just don't even know how much the banks are taking from us. I genuinely, I don't look like, and maybe I'm a bad business owner, whatever, but like, I see it as a fee I have to pay, right? Like I have to continue working. Why even bother? I had no idea that I could even do something like this. And I'm sure most business owners have no clue.
Yeah. It's understandable. Again, it's confusing. It's I won't say intentionally made confusing, but it is certainly confusing for a lot of folks. And it's not a top priority for a lot of people either, primarily because they don't know how much could be saved. Mm-hmm. But we've seen the very first client that we served, we generated savings of $265,000 a year for them.
Wow.
And it was like, wow, okay, so that's a unicorn for us. The next client, these were larger entities, by the way, but the next client, we generated $600,000 a year. And so it was like, okay, well, yeah, here's our proof of concept. We know we got a viable product here. We got to go out and do this. So it's, there's a lot of factors to it. It'll depend on the industry, the location you are, and those various things. Yeah. But the big rule is if you don't ask, you don't get.
Yes. Well, it's the same thing with business development and meetings. You can't have a meeting you don't ask for.
Yeah, that's right. That's right. Now, the subclause to that rule is, but you also have to ask the right way and provide the right information to support that ask. So ultimately, the people that you're face to face with in the bank are not decision makers. They really can't say to you, okay, yeah, Kelly, I'm going to cut your fees 50%. They don't have that authority. You've got to make it as easy as possible for them to take the information and move up the next level within the bank or the level after to where the decision can be made. You've got to make it as easy as possible to do that. And the best way to do that is for you to provide all of the information that you know is applicable that will help them with that decision. Now, there's lots of people who'll just say, well, I'm just going to go in and say, well, if you don't give me this, I'm going to leave. I'll go to another bank. Well, you've got to have your homework done to see if that's even possible in the first place. So understanding how competitive the banking world is, I've actually seen competition within departments in a bank.
Wow.
fighting over business deals. The fact is that every banker out there is, they've got incredibly complicated scorecards that they've got to do, but business development is a major thing for them. So the challenge is the pie is only so big. If you're in a town and there's 4 banks there, the amount of new business that they can get is only so big based on the economic conditions within the town, right? And so it ultimately, these guys are tripping over themselves trying to get deals. And the best way to do that is to understand it and then leverage that competitive side of things. It's no different than if there's 2 or 3 plumbers in a town, they're all going to be, there's only so much work to do. And so you got to do your best to get that and land it. And so it's really about understanding those factors and then being able to put the pieces in place. Now, you raised the point about saying, okay, well, so I've decided I'm going to change banks, right? So ultimately, what we try to figure out for them is, here's what we figure you can get from Bank B or Bank C, right? Now, maybe you just go back to your bank and say, here's a more competitive deal. You need to match this or improve on this, right? And so maybe they say, yeah, okay, fine, we can do that. And you don't have to change banks, but you've done the work, you've got the result from doing that work. Now, if your bank says, no, we can't come close to that, there's no way, sorry, Kelly, I can't help you.
Yeah.
Right? And it's like, okay, do I want to make the decision to go down the street to Bank B? Yes, so that's it. So you've done that. The best way to do that then is to project manage it and understanding all the bits and pieces. Again, from my experience, I've done major migrations for national companies and manage that very meticulously to ensure nothing falls through the crack. Just as an aside to that, I had a client 2 years ago who came to us and said, hey, we've made the decision, we've done our own work, and we think we've outgrown the services that our bank provides. And so we've started to look for another bank ourselves. And we've met with 2 different banks, and the process is driving us crazy. We've got to sit with these bankers, tell them the exact same information over and over and over. And we can see these guys just sitting there going, oh, wow, look at all these services I'm going to sell by taking this customer on.
Yeah.
And so they got very frustrated with the process and came to us and said, hey, can you help us? Yes, we'll take this on. We'll do it. We'll pitch it to 5 or 6 banks for you, and we'll come back to you with our recommendation, and then you can make the decision from there. So we always leave it to the client to make the decision, but we just gathered the information for them.
The thing that really surprises me is that, like you said, it's money that you shouldn't have to pay, right? Like it's not like you're having to go out and generate more revenue. It's like this is your money. It's like tax time, right? It's like if you do your taxes right, you get your appropriate amount of money back. It's like if you shop your banks right, you get your appropriate amount of money back. But at the same time, it's money that should be in your pocket. But most of us just have no idea that's even available, or that another bank might be more competitive. You mentioned in the beginning, essentially Canada it's the big 6 banks, correct?
Yeah.
Are they really that different?
No, they're all good at moving money from point A to point B, or taking your money and putting it into an account and not paying you any interest on it and charging you fees. And like, the differences come down to the types of transactions and the fees that they plug onto each of them. So it's volume driven and it's relationship driven, right? Here's an example. Before I left the bank, we were negotiating to take a client on, and he said, "Yeah, well, this is just one business. I have 12 other businesses that I'm part with, that I'm a part of, and whenever I start a new one or need a new service, I just call up this person at the bank, and they've taken care of it for me." I go, "What? Yeah. Do you know why they jump on it so quickly and that sort of thing?" He goes, "No, not really. I just thought it was, they were good people and it was a good relationship." I said, "Well, but do you understand how much they're making from that relationship?" And I said, "How much of a discount are you getting because you have 12 companies and they're all profitable companies? They all had large balances and they had lots of transactions." He goes, "I don't think I'm getting any kind of discount." I said, "So you're paying standard fees?" He said, "Yeah, I guess so." I said, "Well, that's why you're getting such good service, because the minute you pick up the phone and call, the representative is like, 'Excellent. Okay, I got another business for this person. It's all standard. I don't have to negotiate. I'm doing all the paperwork is standard. It's quick and easy for me to put this on. I've ticked off all these sales that I've made for this particular client on this day.
Yeah.
I've had to do no work, basically, because he just brought it into me, and it's going to be a very profitable piece of business because he just accepts whatever fees we offer him."
Like, you're making me feel bad here, John. I had no idea, man. Okay, let's say I'm a business owner listening right now, and I am like, oh crap, like I'm doing, $2 to $5 million a year with my bank. I've never once negotiated anything with them. What does that process even look like? How I get, obviously one of the great steps would just be, to call Calibri and have you guys handle that for me. But if that's not available to me for whatever reason, what are the steps that I should take to get a better deal or a better rate with my bank?
Yeah, good question. So really, first of all, you need to accumulate how much you've paid in fees to a particular bank, right? And then based on those fees, look at the balances that you're also carrying there, because in a lot of cases, the banks will say, "Oh, yeah, but no, we don't pay interest on that," but there's probably surplus balances there. Some banks will give you a discount because the balance can help offset the discount. In some banks will offer accounts that will give you X number of transactions free based on those balances, or the minimum balance that you carry and that sort of thing. So there are a lot of factors to it, but ultimately it's one, gathering that information. So we typically say, just give us 3 months bank statements, Mr. Business Owner, and we'll start sort of an analysis there. And we'll figure out how many transactions of each type are through there, what the fees are for that, and what we think the fees could be based on our experience. And so you gather up that information, you do the work, and you provide a summary, and you go to the different banks and say, "Here's my transactions on average. Here's the balances I carry. What type of account can you provide for me on this? What will my fees look like if I run this amount of transactions to this account? What are my fees going to look like?" And they should be able to calculate that for you, because they should understand the fee structures they have. Now, we built a calculator ourselves. We can compare all the accounts across Canada by putting it into the calculator that we built. So we take the transactions and plug it in and go, okay, Bank C has the best account based on this information, right? Now, do you want to go to Bank C? No. Well, Bank B has the next best. And so it's a matter of fully understanding the information that's available to you and what you should present to the business. Again, if it's on the loan side, then you're going to want your financial statements and some analysis done around that. That's the financial position of your company. And so it's really about presenting the appropriate information. You provide the same information to the different banks and let them come back to you with an offer to say, okay, which is going to be the best of these for me.
John, in your experience, where are we spending the most money with the banks? Is it on the day-to-day transaction fees? Is it on the loans? Where are we losing the most money to banks?
Hard to say. Across the board, it's challenging to say. The biggest impact can certainly be on the loan side and not understanding what rates are applicable out there, or not making changes or requesting changes when your financial position improves. And again, not understanding what the next bank down the street would offer you. Uh, on the flip side of that, banks always do an annual review on their borrowers. So if you're a business owner and you've got an operating credit and that sort of thing, the bank is going to ask for your financial statements and want to do a review on that. And you can be sure if your financial position has deteriorated or there's adverse factors, that they're going to want some changes made to that will benefit them. On the flip side, if they come back to you and say, no, financials all look good, we don't have to do anything, no changes from our side this year, that should be a trigger for the business owners to say, okay, I should be now asking for changes because my financial position has improved. And so, but again, it's not knowing where the price points are is the challenge for that, or knowing what factors factor into the risk rating that is accompanied with these business loans. So there's typically, you might be paying an extra 1-2% on a loan that, depending on the usage and the amount, could be a significant amount of money, right? It could be the loans are structured incorrectly. Maybe you need, instead of just an operating credit, maybe you need a term loan as well. And again, it's the experience level that works with you. You can't just rely on the banker to say, yeah, this looks fine to me, it's okay. Because again, you don't know the experience level they have, what's going on internally within the bank, what other options are available to you. So the loan side, the interest rates there typically tend to be the larger amounts on someone's financial statement.
Yeah.
The fees are significant as well. People don't realize how much leeway they could generate from the fee side of things. And then there's credit card processing, the merchant rates that are charged on those, and the ability to get those reduced through competition is also very significant. Again, if you raised a good comment earlier that when it comes to taxes, people have to pay their taxes, but you want to minimize those or defer those as much as possible. But when it comes to bank cost, it's like, oh well, that's a cost of doing business.
Yeah.
But if you know where to look and how to look, there's a large savings again that can be achieved. I've suggested to business owners in the past, if you start looking at your bank costs all in as a cost of goods sold, put it up into your profit margin lines, they would look at this differently, right? As opposed to just a fixed cost that's below the gross margin line on their financial statements. If you saw you could save another 1 or 2% and get that on your gross margin, drop it right to your bottom line, that can have significant implications. Right?
And huge. But most people, like I said, they just have no idea this is even possible. Like, thank God, there's companies like yours out there who can help these people. But many people, even I, until we met, didn't know that a service like yours even existed.
Well, yeah, we're new. We're very niche. We started out just in our market here in Atlantic Canada back in 2019, but over the last couple of years now, we've been expanding across Canada, and we've actually done a couple deals in the U.S. as of this recording. So, yeah, people get the value proposition that's here, and it is significant. If you're say you owned a business and you were generating $5 million a year, if you could save $50,000 to $100,000 a year, you could increase employee benefits, make donations to worthy causes or sponsorships or anything else. It's like, put the money back in your own control, in your hands. Don't just be passing it over to the bank and say, well, yeah, that's cost of doing business. It's just, to my mind, it's not acceptable. Now, I'm like the reformed smoker in the room, I guess, is that it's all bad, right?
Well,
they're a necessary evil. Let's put it that way. The banks are a necessary evil.
Sorry. Yeah. You made a very interesting point where you kind of said like a bank at the end of the day is a for-profit enterprise. And we just go to them like, oh, you have my best interest in heart. Like, you know what I need. And it's like, it's very interesting that we take that approach, that we don't necessarily look at them as like, these guys probably want to make as much money off us as they humanly can.
Yeah. Yeah. When my partner has an interesting take on it when he says, oh, so you go to the bank and they say, well, here's our standard fees, right? And they give you a big brochure that has all the information in it that nobody ever reads. And he says, oh, the standard fees translates, this is the most that we're allowed to charge you right now.
Mm-hmm. Mm-hmm. Yeah, that's crazy. I would have never, and it's like, of course, there's got to be a better way. I just think so many of us just had no idea. I guess my question to you is, when you approach them with these proposals, do they just look at you and say, well, there's a new person born every day. There's a new business owner born every day. We don't have to accept this proposal. I guess on a certain level, we are so naive, and I hate to say that as a Canadian. I want to say that we know what we're doing, but I think so many of us are so naive about it. They could just say, well, John, this is great and all, but we know for a fact there's another business owner coming through this door today who's going to pay our standard fees. So do we even care?
It is a good point. Here's a little segue. When I was going around, we were shopping our own bank account, and we went to this one bank, and I met with a young lady there, and I explained to her what we were going to be doing from a business perspective, my background and that sort of thing. And she laughed. She said, okay, so when I see your name come up on my call display, I know I'm going to have to cut my fees, right? And I said, thank you. I've understand you get the value proposition very quickly, right? So to your question though, or to your comment is, yeah, there may be bankers there who'll say, yeah, no, we don't need to do this. And that's fine, right? But at the same time, each of those bankers has business development objectives that they have to meet. Right. And so it's like, okay, well, if I want this deal, if I want to keep this customer, I'm going to have to this is the rates I'm going to have to get to. How do I do that? They've all got their own little ways to do it. It might be, well, I can't cut this one by 50%, but I can cut this one over here. And then the overall effect is we get to that 50% or 40% or whatever we're looking for. Right.
Yeah.
So it's lots of little tips and tricks. When we write a proposal for a business, let's say it's on the lending side. So we've had clients who say, I need how much money can you raise for me from a bank? I was like, okay, well, let's look at this. And so we get all the information. We write the proposal from a risk perspective. So that's the key factor the bank is looking at. What's the risk involved if we lend them this money? But then we balance it out in the proposal from a business development perspective. So they all got targets that they need to hit and everything else. And then, the banker looks at it and goes, yeah, I've got all the information I need here. I just need to go to my boss and then on to the next boss or to whoever's going to wave the wand and make the authority that day. Then everything is done. I don't need to do a lot of work here. I got to do my own paperwork and stuff, but I have the information here necessary to be able to enable this decision. And so it speeds the process up for them internally. And so the reaction that we've gotten back from bankers is, wow, this is great. I've got everything I need here.
Yeah.
I saved a ton of time. And in some ways, they probably say, well, you've actually vetted this a small bit because based on your experience and the information you've gleaned for us, right? And so it's really interesting to be able to see both sides of it for sure. But that's the way we have to balance out the information we have in the proposal to manage the aspects that the banks need, and that's credit risk and business development.
Yeah, I love this. I really do. I love Calibri. You guys are incredible. We need more, and I hate to say this because I don't want you to have a whole bunch of competition. I want you to be super successful here, but the world needs more of this.
Yeah, well, no, we just need one. That's all.
With lots and lots of staff across the country.
It's interesting because the fact that, again, this is where I've seen accounting firms say, well, yeah, we can help our clients do this. And I said, well, what is it that you're going to do? Well, I'll call up my buddy at such and such a bank and they'll help me out. And well, you're still only getting one perspective at that point. And yes, he might be able to give you a better deal than you currently have, but it's not the best deal because you haven't compared it to anything.
Yeah.
Right. Anytime you got a number, right, it has to be compared to something else to be relative. It's 5 means nothing, but if you take 5 and compare it to 10, then you got something that's reasonable. And so it's challenging for business owners to do it. They're frustrated with the banks. And if you look at CFIB surveys, every 4 years, and even CFIB figures it's a complicated issue, and they only do it every 4 years, but they survey their members and on banking services, right? The last result came out at an average rate of 3.5. Now, if that was out of 5, 3.5 out of 5, that'd be a good, reasonable result. But it's a satisfaction level of 3.5 out of 10.
Yeah.
So 35%. Now, if your child came home from university with a 35% average, you wouldn't be paying them out any more money to be going to school, right?
Yeah. Yeah.
So it's like, okay, 3.5 is the overall satisfaction rate. When it comes to loan interest rates, it's lower than the average. It's like 2.5. Fees are like 2.6. It's crazy when they break down those comparables.
Yeah.
It's also been 3.5 is one of the better ratings they've had over the past couple of years. I've gone back over 3 surveys, so that takes 12 years, and they've never had an average over 5. It's like frustration levels are through the roof, but they don't know what to do about it. So what we're offering is something that can be done about it by engaging with us and saying, hey, let us help you, help yourself. Take that money that you save, give it to your employees, donate it, whatever you want to do, but just don't donate it to the bank, right?
My gosh. And I did a show not that long ago just talking about how like the vast majority of businesses are small businesses, right? Small to medium-sized enterprise account for like 95, I think, percent of businesses, or if not more than that. Like it's considerable. You know, if I remember correctly, we contribute something like 46% of the GDP is small and medium-sized businesses in Canada. Like we are a substantial powerhouse. How much power do we have? You know, we've been talking a little bit about, obviously the big corporations know how to do this. They have treasury managers. They have people who actually do this on their behalf. Most small and medium-sized businesses do not, which is where an organization like you comes in. How much can a small to medium-sized business, let's say, you know, we're doing $1 million a year in revenue, which I think a lot of small to medium-sized businesses are able to do. We're doing $1 million a year. Can we expect much for that?
Yeah, no, you should demand much for that. Right? It's a matter of, well, what are people willing to pay? The average person doesn't negotiate or doesn't know how they can leverage their business with the bank. And so it's complicated. Every business is unique. Every time that we pick up a file or get financials for a client, there's always unique factors to it. And that's where our experience then comes in and how we look at things and the innovation that we apply to it. So I really, Kelly, I can't give you a number to say X number of dollars based on $1 million, but I can pretty well promise you, there is money to be saved. How much is relative, because maybe you do have a good deal already. Maybe you got the best deal, right?
Yeah, it's a roll of the dice.
Chances are you don't.
Who knows who you got that day, I guess, at the bank, right?
You know, I mean, I've these different taglines and stuff like that. Like, you wouldn't go to court without a lawyer, right? You wouldn't tackle CRA without a tax accountant. Most people wouldn't sell real estate or buy real estate without a real estate agent. So, and you certainly wouldn't walk into a car dealership and just say, hey, I need to buy a car. You're going to do some work around that. So if you wouldn't do those things without having experience or expertise or somebody in your corner, why would you go to the bank and just say, I need this, right?
Yeah.
Like, you need somebody in your corner. And I've whispered in people's ears saying, no, don't do this, do that. I had one client come to us and say, hey, look, we've already been to the bank, but they've given us an offer. It's what they call a term sheet. and we're buying this building and we're down to the short straws on this now. We got to accept it and move forward. But can you explain to us what this means? So we took the term sheet and we actually did some comparison shopping for them very quickly and said, yeah, it's not a bad deal. Here's where you can improve it, right? And so we gave them 4 or 5 things to say. And I said, so when you say this now, the banker is going to say that. And then this is what you say. And the day after they had their meeting with their banker, they called me and said, you know something? It was incredible. It was almost like you were there whispering in our ear because the conversation went almost exactly as you said. And so every time the banker said something, we had the response to it. And yeah, we got improvements to the deal based on what you had told us. Right?
Wow. One of the questions, I want to lead into Calibri, but one of the questions that I have in this whole thing, and it's been on my mind, I feel like the whole interview, especially when we started talking about the big 6 banks, is that in Alberta, credit unions are becoming a big thing. They're really starting to pop up all over the place.
Yep.
And I was wondering, in your experience, is one better than the other?
Yes, there's always somebody better than the next one, right? And that will change next week and the week after. There's always changes taking place. Some of it is when it comes to the credit unions and the other entities around and even the big 6, it depends on your business and the complexity of your business and what you need, the services you need, and how effective those can be. If you need national banking, a credit union is not necessarily going to be able to provide that for you. But again, it's things are changing on an ongoing basis. And even between, over the next 6 months, they'll continuously change. But if you're not part of that discussion or understanding it, or maybe I'm just a bank geek, I don't know. But, I stay on top of those things just because it's important, right? For the average business owner, it's okay, my banking is okay, it's fine, but I don't know if it can be better, how much more it can be better. And so one of the things we try to do quickly is, look, let us do a very quick analysis, right? We'll say no charge for the very quick analysis. And if we think we can save you X number of dollars, right? Because it's got to be worth our while as well as yours. We'll come back to you and say, this is what we think can be saved. Do you want to proceed? Let's talk about how we move forward. Or it could be, you got a good deal. I can't see any way that I can improve this. Now, that hasn't happened yet, but, it's possible.
Yeah.
And so for us, it's, let's do a quick high-level review. If there's money to be saved, then we'd like to help you. Here's how we go forward from here. And it's, there hasn't been a case at this point in the last 6 years that we didn't think we could save somebody a reasonable amount of money that made it worth their while. Now, we've had people come back and say, you know something? Yes, I appreciate it, but I don't think I want to do this right now for whatever reason. There's always other priorities and that sort of thing. And that's part of why I've heard lots of people say, yeah, I'm going to review my banking. And they start it and it sits on the corner of a desk for a while because there's all these other fires that come up, right? And so it sits there and then it's like, well, now that information's outdated. I got to go get something else. If you can't do it and focus on it and move forward quickly, then it becomes a problem. Just another thing that I've got to do. And then before you know it, it's, this is all outdated now. I've got to start over.
Yeah.
So one of the key things that we figured, or when I look for inspirational quotes and that sort of thing for small business owners and small and medium enterprise owners, one of the quotes that I like best is, it's a Peter Drucker quote, and it's like, do what you do best and then outsource the rest. Right? So you can't, if you're a business owner, whether you're a plumber or an electrician or whatever, and you know how to do that, right? But running a business is different. Managing a small aspect of that, running the business, such as your banking, nobody has the expertise to do it because it's not seen as a big dollar savings for them. But, people understand the power of compound interest, right? Like you got an investment, you put your money in and over your lifetime, there's a big increase in it. the power of compound savings works exactly the same way, but people don't see it like that. If you
Mhm.
save $100 a month, it's sizable over the life of your business. If you save $1,000 or $2,000 a month, it's impactful at the end of the day or end of the year. You will see a difference in your financial statement.
And me and you both know that a business always needs more money. No,
Yep.
this is powerful. This is really powerful, John. And I really appreciate your time today. And it's New Year. It's New Year 2026, right? We're heading into tax time. People are getting tax money back. Maybe some of that money should be reinvested in assessing your banking situation. John,
Yep.
lead me into Calibri. Lead me into how the service works, how your fees work, and maybe we talked about it earlier, but is there a size of company that is better for you or that has a better opportunity case?
Yeah. Well, let's start with that one. So ultimately, what we say is we typically cut it off with companies that have $2 million in annual revenue. Now, that again, that's a soft figure because you could be at 1.5 and growing exponentially and could be at 2 million in 6 months, or you could have 2 million across 3 different companies or whatever. So, I typically will say to people, look, if you're interested in this, let's have a look at it, regardless of where you stand. If there's substantial savings, then yeah, we'll talk about some more. If it's not, I'll still give you 2 or 3 tips on where you can save some money or be more efficient or whatever, and you'll come away with that, right? For us, the starting point is one, people realizing that they want to save money or they need to save money or whatever the purpose is going to be. Then that helps from an engagement perspective. Or if there's an immediate need, for instance, right? We're typically, again, we're nimble and small, and then hence our logo. But we're able to do things quickly based on our experience and our industry knowledge. And so ultimately, we'll ask the business for the last 3 years of financial statements and 3 years bank statements, 3 months bank statements and 3 months merchant services statements. From that information, we do our initial analysis. Now, we try to keep the questions back to the company as minimal as possible because, again, it's that time effort that we don't want to be imposing on their time too much. But we'll do our analysis. We've got an algorithm built that, based on certain factors in the financial statement, will give us an indication based on what we've saved companies of similar size and asset and liability layouts. And so we'll run it through that. We'll run the transactional stuff through our fee calculator and come up and say, yeah, there's reasonable potential here to make an impact for this business. We'll come back to the owners or the finance folks and say, here's what we expect. Would do you think it's sizable enough to move forward? We'll sign, we probably signed an NDA prior to getting the financial information, that sort of thing. But then we'll write up our contract for our services and we'll include in that our fee structure. So depending on the amount of work involved with it, we typically quote a fee range. So it could be, but it's always based on the savings that we generate from that side of things. So we might be at 12 to 18%, depending on the complexity. And if it's, if we're asked to source funding for equity strips or for expansion or just to restructure the company in some way, we charge a fee based on the amount of money that we generate for them. So that's a sliding scale fee based on the amount of funds and that sort of thing. But it tops out at 5%, but it's probably more likely around 3 or 4.
Okay.
So again, that's, as of recording, that could change by early 2026.
Of course.
But ultimately, we're as transparent as we can with the businesses and say, this is what it is up front. We do the heavy lifting. We ask for the information and we have a few questions and that sort of thing. But the analysis is all done by us. The proposals that we provide to the banks are all written by us. And they're large-scale professional proposals. As I said, the bankers like them because it makes it easy for them. And so then we always come back with recommendations based, and we get, so far we've had high participation rates by the banks. I think in the last 3 deals, we've probably, had multiple offers on every deal.
Wow.
And so then we'll take the deals, analyze them, rank them, determine what's the best one economically for the business, and then come back with our recommendations to the client based on that. The client still makes the decision. We don't make any decisions for them. We just lay out the framework and say, here you go, which one. I've had clients say, don't even bother going to that bank because I'll never talk to them again or whatever.
Yeah.
There's some idiosyncrasies that have to be factored into it occasionally, but it's a reasonably, what I consider to be a reasonably quick turnaround given the end result. And so it could be anywhere from, 6 to 8 weeks, depending on from start to finish, depending on how complex it is.
Still pretty quick when you consider that the results are substantial, and the results will continue to make payments, pay dividends for years to come, right?
Exactly. Yeah, exactly. That's it. And then, again, like I said in the beginning, you want to be looking at this. I always recommend 3 years. I wouldn't go any more than 5 years simply because of changes in the marketplace, changes in pricing, competitiveness, your own business financial position. As your financial position improves, that increases the amount of negotiating power that you have and the leverage you have over the banks. But for the most part, people just say to their banker, here's my financial statement. If everything is good, that's fine. And the banker says, yep, no, looks fine. We're okay. That should be a trigger to say, no. If I'm okay, then I should have some negotiating power here.
That's amazing, John. This has been
the other
really
thing
good.
too, Kelly, is most of the deals from the banks, particularly for operating credits, are 1-year deals. So ultimately, it's open for negotiation every year. If there's something in there you don't like this year, and you can try and negotiate that away next year, or change it, or whatever. Just don't take things as gospel from the banker when they pass it over to you.
I have a feeling after this show, there's going to be a lot of people talking to bankers are not going to like this show.
Listen, there's only I got to change my numbers now. There's only like an 18% chance that it's the banker that you're, that the bank that you're dealing with, right? So the other ones will all like it because there's an opportunity to get a new deal.
Sure.
1 out of 6 is not going to be happy, but that's it, right?
That's right. John, this has been incredible. I found you on LinkedIn, but what are the best ways for people to reach you and Colibri Financial Services?
Yeah, LinkedIn is our primary channel, for social media channel. So you'll find me on LinkedIn, both myself and the company. Also, you can phone or text me at 902-483-2342 or email john@colibri-fsa.com.
And John, you've already given a ton of great information. We're talking to, a lot of newer companies, right? A lot of people maybe are listening to this show. They're just starting their very first company in 2026, or heck, maybe they're still brand new and they haven't done a lot to do with banks. You've given a ton of great information, but I do just want to pick your brain for one more piece. If you were talking to a new business, they have never launched a business. They were in maybe my position 5 years ago at this point, walking into a bank, that maybe the bank that they've banked at since college, like me. What advice would you give them ahead of opening their business bank account?
Shop. Do the comparison shopping, right? Ultimately, that's what we are. We're a comparison shopper, whether you want to call us Kayak or Expedia or whatever. We're sort of a consolidator of information, right? And if you're a new business owner and you're going out to do that, then you need to shop. You need to know what's available there. Don't just take the brand color that happens to be closest to you on the street or whatever. It's about getting the best deal. That's your responsibility as a business owner, is getting the best deal, right? I mean, you're going to negotiate with suppliers, whatever. You're going to negotiate with new employees, trying to hire them, that sort of thing. People tend to not negotiate with their banks. And so, again, if you don't ask, you don't get.
Amazing. John, this has been incredible. Thank you so much for joining me. I wish you the greatest of success with Colibri. That's amazing what you guys are doing. And I know for a fact people are going to listen to the show and call you. So give John a call. Guys like this deserve the business.
Thank you, Kelly. It's been an absolute pleasure to meet you and chat with you again. And looking forward and congratulations on your amazing success. I guess you're up to 308 now episodes. That's fantastic. And it's a really informative podcast, and I wish you all the best, sir.
I appreciate that. Until next time, you've been listening to the Business Development Podcast, and we will catch you on the flip side.
This has been the Business Development Podcast with Kelly Kennedy. Kelly has 15 years in sales and business development experience within the Alberta oil and gas industry and founded his own business development firm in 2020. His passion and his specialization is in customer relationship generation and business development. The show is brought to you by Capital Business Development, your business development specialists. For more, we invite you to the website at www.capitalbd.ca. See you next time on the Business Development Podcast.
Hey, rock stars. If you've been on the entrepreneurship journey for a while, you know this feeling. In all the interviews, in all the coaching calls, one truth kept coming up over and over again. Leadership is lonely. Business development is lonely. And entrepreneurship is lonely. You can't just talk to anyone about it. That's why I created the Catalyst Club, a private, values-driven community where you can speak the truth, be your authentic self, and connect with people who understand what you're going through and can actually help. We made it private so you feel safe. We made it affordable so no one gets left out. And we built it on values that matter, like showing up, sharing knowledge, and choosing growth over ego. Inside, you'll find coffee with rock stars for real talk and connection, unplugged Q&A for live coaching and clarity, and Catalyst sessions with world-class experts who light a fire under your next move. We're building the most supportive business community on the internet, and we want you to help us do it. Join us today at kellykennedy.official.com. We're just getting started.